Good afternoon, everyone. In today's video, we'll take a look at the volatility that presented itself in the market on the backs of a scheduled volatility event, and that too at the market open. That's 9:30 a.m. Eastern, 6:30 a.m. Pacific, and that was Powell's testimony. That really set, I think, the bar for the rest of the day. It was going to be a high volatility day. We had a planned scheduled volatility catalyst event. The question was now, how do we capitalize on this volatility? So for that, let's start first with our index markets here, and I'll show you just the S&P. So I'll actually change this to index instead of indices. After that, we'll move on to sectors that were driving the actual volatility inside of the S&P. And then finally, I'll show you an example of 1, 2, 3, and 4 stocks that actually triggered volatility breaches in some fairly large cap names. So that's the premise of today's video. Start first with a scheduled volatility catalyst event. See how that volatility translates to our index markets. Using that, we can then really start to narrow down from sectors down to stocks. So let's get started here with the S&P 500 first, our index market. I'll start by loading in our scalper volatility box model. And that's the very first model we start with every single day for our futures market. It's our most aggressive model, and we have 5 ranging from the scalper all the way up to the doomsday conservative model here. That's number 5, and this then gives you an ability to adapt to changing volatility conditions. This has the unique benefit of being much better than, say, being relegated to only the scalper, only one model, where, say, when you have something like this in the morning, you're pretty much stuck on the sidelines for the rest of the day. So let's see how that translates now inside of the S&P. So if I zoom in, off of the backs of Powell's testimony here, price action in the S&P has a pretty dramatic increase even beyond our scalper clouds well before that 7 a.m. mark hits. So that immediately takes us out of the scalper, and by the end of this, by adapting to volatility, we now switch to the aggressive volatility box model. Take a look to see how the same volatility period looks. Here, we can see prices still going outside of the clouds. So we're still seeing this volatility continue in that same hour. We need to adjust, find a better model. Long story short, the model that actually contains price action is the conservative model. So we've broken past the scalper, the aggressive, and the doomsday aggressive. In layman's terms, this right here is your very clear indication that, hey, volatility today is high. It's much higher than what we're used to seeing. We've typically been on the scalper now for the past few weeks. Today, we've broken outside of scalper, aggressive, and doomsday aggressive. So that's your first sign that there's high volatility. Now let's try and see which sectors were driving that really for much of the day today. The 2 that stood out to me are XLI. So let me first load in XLI here, and I'll load in our stock volatility box models. Now, using the stock models here inside of XLI, we can see in that subsequent hour after Powell's testimony, 7 to 8 a.m. Pacific, how price action inside of XLI rallies. We hit the upper edge of our volatility box clouds. This triggers a short side trade. We're looking for the edge signal, which we get right here, the red arrow. That's our oversold confirmation. We get a retest of the sign line, and this is really the short side setup. In terms of risk, our stop is outside of the volatility box clouds near that 87 mark, risk first. This distance right here, which in the case of XLI was right around 32 cents. We were looking for that same move. We got about 53 cents, so almost double of what we were looking for. That was the first trade inside of XLI. If we take a look at some of the components inside of XLI, these had volatility as well. Let's take a look at UPS along with Honeywell. So if I first come into our charts, we had very similar volatility compared to what we saw in XLI. First price breaches, our sign line triggers the fade setup, we have our rules met, and we get a nice little reaction away from the volatility box levels with very little heat on this trade. Now if I show you Honeywell, that was a little bit different in terms of the heat that was required on the trade. Honeywell here, very same idea, breach the upper edge of our volatility box lines. We see the sell side short signal, the edge signal confirmation right here. But after that, price then rallies and goes outside of our clouds with this wick touch right here. So inside of Honeywell, much more volatility when you compare it to something like XLI, the actual sector, or even UPS inside of there. But we still get the same idea in terms of a sell-off from that level. Now another sector that also had, in my opinion, fairly high volatility today was XLE. So XLE here, same idea, 7 to 8 a.m. Pacific, price action rallies inside of our aggressive volatility box sign lines. We have 1, 2, and 3 oversold confirmations, and XLE from that point gives you a really nice sell-off. Again, same idea, stop is outside of the clouds. The risk we were looking for inside of XLE was about 50 cents. In terms of the actual move that we got, about 3 times that, $1.24. So it gives you an idea of how the volatility translated today in terms of capturing these reversal areas. Inside of XLE, one example for a stock was CVX, where it triggered 2 times off of our volatility models, once right here and the second time right here. So the first time 7 to 8 a.m. Pacific, second time was towards that 10 to 11 a.m. Pacific mark where price breaches our sign line, and here we have a sell-off before we have any sort of real entry. So 2 sectors so far, XLI, XLE, and we've taken a look at individual stocks inside of those sectors as well, starting first with really the index markets and our catalyst in the first place, which was Powell's testimony. Now, before I conclude this video, I have one more example for you, which is from a symbol inside of XLV, and that's UNH. Now, let me first, inside of UNH here, I'll get rid of the hourly models because the daily are what I'd like to focus on. Now, using the daily models here, this gives you an idea of how the hourly lets you capture some of those intraday reversals for some nice opportunities every single hour. The daily model are concrete levels every single day that we're looking to tag. So you'll see how this level stays static throughout the entire day here. And the first time this gets tagged is right here. We hit, or rally rather, into our upper edge of the daily volatility box models. This even appears on our live scanner. After that period, we have a nice little sell-off inside of UNH in terms of the actual risk. We were risking right around $2. In terms of the actual move we got was right around $6, so 3 times that risk. That happens here once, second time right here, third time we finally break outside of the clouds here, and we finally end up closing back inside of our ranges, but very clearly bullish strength that came into play in that 10 to 11 a.m. Pacific hour inside of UNH here with this rally. So hopefully through today's video, what I'm hoping you were able to really take away is how we started with a volatility catalyst event, volatility catalyst event. From there, we moved on to seeing how that translates to the S&P 500. From there, we tried to then narrow down to how that translates to the specific sectors. And then finally, we saw how that translates to specific stocks. So anywhere along this, we had volatility in the S&P 500 that you could capitalize on, volatility inside of specific sectors as we saw that you could capitalize on, and finally, if you're say a stock trader only, volatility inside of specific stocks as well that you could take advantage of. So hopefully in today's video, this drives home the idea of whenever we do have any of these planned volatility catalyst events, a very concrete systematic process that you can follow. Go through first the indices, then your sectors, and then find the places where you'd like to focus in on. Hope you found today's video helpful. Take care everyone, good luck trading, and we'll see you in the next update.